The world is full of foolish gamblers, and they will never do as well as the patient investor. That's a famous quote by Charlie Munger, who for many years, for decades actually, was Warren Buffett's partner at Berkshire Hathaway. Munger also said patience can be learned. Having a long attention span and the ability to concentrate on one thing for a long time is a huge advantage. Now, those are just two of more than a dozen quotes that Warren Buffett included from his partner in the 2022 Berkshire Hathaway shareholder letter. Most Christians maybe think the Bible speaks to Sunday mornings, but not to shareholder letters. But I want to show you how Warren Buffett's 2022 Berkshire Hathaway letter reads like a field manual for Christian entrepreneurs. He talks about disciplined stewardship, honest accounting, patient compounding, wise risk, generous living, and many other things. I started a series beginning with the 2024 Berkshire Hathaway letter. These are some of the most read letters in the world when Warren Buffett writes these letters to the tens of thousands of shareholders in Berkshire Hathaway. I'm a Berkshire Hathaway shareholder, perhaps you are as well. And I'm kind of working my way backwards and trying to do YouTube videos covering all of these letters, and particularly looking at them from a Christian perspective. So for the 2022 Berkshire Hathaway letter, I want to look at 5 specific themes and apply each of those to Christian leaders, Christian entrepreneurs, Christian investors, whether you're leading a church, leading your home, leading a business. Hopefully you'll see that these things really resonate. The first of those themes, after going back and rereading the 2022 letter to investors, is character first. Buffett opens his letter, as he does several of his letters, by describing 2 kinds of ownership at Berkshire: controlling whole businesses and then buying partial stakes through public stocks. And the key is that he and his partner, Charlie Munger, aim to make meaningful investments in businesses with long-lasting, favorable economic characteristics and trustworthy managers. That's a direct quote from Buffett. And the trustworthy managers is a huge part of it. Buffett emphasizes that he only wants to work with people who are trustworthy, people who have integrity. He says, we can tolerate business mistakes, but we have zero tolerance for personal misconduct, for cheating, for lack of integrity. Buffett likes to say, I don't pick stocks, I pick businesses. He's not in it for the short-term, flipping of something. He's in it for the long haul. That emphasis on character really anchors in many ways everything that Buffett does. And this is an emphasis that comes up repeatedly in scripture, right? Proverbs 22:1, a good name is rather to be chosen than great riches. Titus 1, 1 Timothy 3 remind elders and really all Christian leaders that integrity is the key qualification for ministry. If you look through that list of qualifications for a pastor, you'll see that the list is very focused on personal integrity, much more so even than ability. We need to realize that a great business with a crooked leader is just a ticking time bomb, right? So some applications for Christian owners. If you're thinking about buying a stock, if you're thinking perhaps about buying a business, maybe you're looking to buy a plumbing business or something that, I've had the privilege of buying a number of businesses. I started a number of businesses. I've bought a number of businesses. But before you buy, ask, would I trust this manager with my children? Not just with my money, but this person who's going to run this business for me. Would I trust him or her with my children? Also, you need to develop within your business, within your church, your leadership ministry, zero tolerance for personal misconduct. We need to offer grace. The Bible talks a lot about forgiveness, but we can't see that as an excuse to just have no guardrails and just to keep letting someone get by with the same sin of embezzlement or whatever it may be. And when you're thinking about investing in a business or a stock, don't think, will it pop? Can I ride the waves of this? Is this, kind of a get rich quick scheme? Rather think, will it persist? Warren Buffett talks a lot about moats, about switching costs, about brand, about network effects, rather than just thinking about momentum. I would encourage you to think in terms of being a value investor rather than a momentum investor. As far as my personal experience with property deals, owning several dozen pieces of property and business acquisitions, sometimes I've walked away from cheap assets or a cheap business when the seller's story didn't reconcile with their tax returns or with the ledger. It's better to potentially miss out on a hot deal than to inherit a moral hazard or a huge mess or something that really was not actually true. Sounded too good to be true, it probably is. The second theme win with patience and compounding. To use Buffett's words, he talks about a few flowers that mature over time. And he says, you can be wrong a lot, but those few that you're right on can make you a whole lot of money. And he goes back to 94, 95, their investments in Coca-Cola and American Express. And I think in each of those, they originally invested about $1.3 billion. And he just walks through the dividends that have grown every single year, both from Coke and from American Express, that have reached hundreds and hundreds of millions of dollars annually, so that they've been paid back multiple times just through dividends, the amounts that they invested in both Coca-Cola and American Express. And he talks about that over the decades, a few good decisions, and he really says he's made about one good decision every 5 years, and those few good decisions do the heavy lifting. He said the weeds, his bad investments, end up withering while the flowers bloom. So he says, start early, live a long life, be patient, and let compounding interest do its thing. Galatians 6:9 says, do not grow weary of doing good, for in due season we will reap if we faint not. So compounding is God's ordinary providence in finance and in sanctification, small faithful steps over the long horizon. Some application in your own businesses or as you invest in stocks designed for dividend growth or cash flow growth. Think of the idea of what you make from your business, trying to reinvest that back into the business, or time to kind of cool off, talk to other friends, have a partnership agreement or an investment committee. Measure portfolio contributions. This would be a third one. You could call it tracking power laws or measuring your contributions by your profit and loss concentration. So expect 3 to 5 businesses usually to drive the bulk of your lifetime returns. So that's not always the case. Maybe you'll have 10 stocks that do really well, or maybe, but I mean, even for me, we have, depending on how you count it, between 17 and 21 different family-owned businesses. But typically in a given year, it's 4 or 5 of those that give the vast majority of the returns. And then several of the others make a little bit or barely break even. I've had companies that when I bought them, I thought they would be a single, and they've turned into a home run. And part of that is not just selling it right away, not selling the company when it hits its first double. There's a few companies I've sold, but for the most part, being willing to hold for the long haul. Build discipline that makes it easy to be patient, whether that's automatic dividend reinvestment, delayed sales policies, having board approval on something if your business gets bigger and you have a board, or if you're publicly traded. A third theme that I see in this letter is measure what matters. Buffett would say, ignore the froth, ignore the frivolous stuff, and honor the truth. And Buffett separates operating earnings from GAAP reporting. And I don't want to get really into this, but he talks about essentially, we want to give you the most accurate numbers. He also talks about the value of buybacks. And he says, some people, even government officials, are very much against buybacks. But if the stock price is right, there's a lot of value in buying back even our own stock. He says a lot of companies are going to try to beat their quarterly expectations with accounting gymnastics. And basically Buffett says using accounting gymnastics and making the numbers, figures lie and liars figure, that's not a virtue, that's deception. And he would say, the market is not efficient, it's not rational on a day-to-day basis. But over the long haul, this is a famous quote from Benjamin Graham, right? It's a voting machine. It's a voting machine until the weighing machine arrives over the long haul. Proverbs 11:1, a false balance is an abomination to the Lord, but a just weight is his delight. Christians must tell the truth with numbers, whether that's reporting in a business meeting at your church. And again, Buffett strongly prefers referring to owner earnings. Maybe an application here for your business. Maybe you'd have an operator's dashboard where you could track metrics tied to durable value. Maybe you would track retention or cash conversion cycle or free cash flow. It's easy to get a KPI, a key performance indicator, that's kind of a vanity KPI that maybe looks good to potential investors, but really is not telling the full story. So be honest with your numbers. Also be smart with buybacks. If you are publicly traded, or even as you think about reinvesting in your business, Buffett makes a big point that he would repurchase Berkshire shares if they're below intrinsic value, but it'd be kind of foolish to repurchase them if they're higher than intrinsic value. And he says that benefits all owners. He gives this illustration. I'm going to use his words here. Imagine, if you will, 3 fully informed shareholders of a local auto dealership, one of whom manages the business. Imagine further that one of the passive owners wants to sell his interest back to the company at a price attractive to the 2 continuing shareholders. When completed, has this transaction harmed anyone? Is the manager somehow favored over the continuing passive owners? Has the public somehow been hurt? And he's saying there's 3 people that own this car dealership. And one of the guys who's just an investor says, hey, I want to sell my share back to you guys. You're managing the business. And they all agree to do it. Buffett would say that's a win-win-win. And he says, when you're told that repurchases, by us repurchasing shares, that it's harmful to shareholders or to the country, or that it's beneficial to CEOs, you are listening, these are Buffett's words, to either an economic illiterate or a silver-tongued demagogue. He says, characters that are not mutually exclusive. He says, that's ridiculous to be against buying back shares. So just another point of application here. If you lead a company, particularly a publicly traded company, right? Refuse expectations management. Teach investors your measurement philosophy once and stick to it. Be honest with the numbers. And with my businesses, we've tried to standardize financial metrics across our portfolio. And someone would bring me a pitch deck, and I often get pitched to invest in a company or buy a company. Maybe that deck sort of hits the number, but the cash tells a different story. So I don't move forward, right? We worship a God of truth, not the God of optics. I think we live in an age where they try to say optics are everything, but let your yay be yay and your nay be nay. Fourth theme, build a fortress balance sheet and make risk boring. Buffett highlights Berkshire's insurance float, which grew to be well over $150 billion. He highlights the strategic acquisition of Allegheny Insurance that really deepens that engine. And he talks about the synergies between Berkshire and Allegheny, and that because they have a boatload of cash and treasury bills, they can avoid behaviors that create cash needs at the wrong time. Buffett says every CEO should be seen as a chief risk officer rather than a chief executive officer, a chief risk officer. In other words, liquidity, discipline, having a big margin of safety. Those are particularly important when others are panicking. And you think about in the Bible, in Genesis 41, Joseph saves Egypt by building reserves during the time of plenty, so that during the years of famine and the lean times, they have plenty of reserves. One of my kids was talking about that this morning. Proverbs 6 points to the ant storing up during the summer. So Christian business owners, Christian entrepreneurs, Christian operators should make risk management a priority. Some application. Liquidity is vital. You need a certain minimum number of months of operating cash on hand, headroom targets, treasury policies that prefer short duration, high quality reserves in your business. Secondly, don't try to be the big hero with leverage. Debt can be a tool, but too much debt, too much leverage quickly turns a tool into a trap. You can very easily get trapped with leverage or over borrowing. And remember, the CEO should be thought of in many ways as the chief risk officer, right? They should go into quarterly meetings thinking, what could kill us? What could destroy our business? How do we, depending on your business, how do we get redundant power? How do we get redundant suppliers? How do we get redundant cash? What could go wrong? And when it does, how will we respond to that? Fourthly, in this section, Buffett talks a lot about the American tailwind, that it would have been impossible for Berkshire Hathaway to do what it's done without the United States. And he talks about this in most of his letters, the amount of taxes that they pay. But he does say you can't let that American tailwind turn into presumption. His confidence in America is not an excuse to be sloppy. It's a framework for staying invested, but still remaining prepared. With our real estate investments that my family has made, we take a pessimistic view of renters, for instance. We don't think, we'll fully be able to rent out this shopping center if it has several vacancies. Part of the reason why I buy real estate cash. Some people think I'm crazy, especially with commercial real estate, to buy it cash. You could do a leveraged buyout and so on. But in operating our companies, we try to maintain a lot of dry powder for opportunistic buys when competitors need to sell. If you have patience and you have liquidity, it presents you with a lot of options. The fifth theme, final one I want to talk about, is practicing stewardship and gratitude. You could summarize much of Buffett's letter with these three words: give, partner, endure. And Buffett loves the fact that so many Berkshire shareholders are they're in it for the long haul. They're savers. They're not going out buying Lamborghinis. Some of them have become incredibly rich, in many cases billionaires, from their Berkshire stock. But many of them, he says, put that into philanthropy, not building dynasties. He talks about Berkshire's tax contribution to the nation. He doubles down on the American tailwind. He celebrates partnership, particularly Charlie Munger. And again, Munger was getting close to 100 at this point. He ended up passing away the next year in 2023. But he says Munger's wisdom made him better, made Buffett better. He later would call Munger really the architect of Berkshire Hathaway. That'd be his next year's letter. 1 Timothy 6, 17 through 19 commands the wealthy to be rich in good works, to be generous, to take hold of that which is truly life, Ecclesiastes 4:9, talking about the benefits of partnership, 2 are better than 1. So stewardship is vertical. We have a stewardship before God, and it's also horizontal. We have a stewardship towards our neighbor. In this section, I want to just tell you a few of the famous quotes from Charlie Munger. I started with 2 of them, but here are some of them. If you don't see the world the way it is, it's like judging something through a distorted lens. He kind of famously has said before, all I want to know is where I'm going to die, so I'll never go there. And a related thought early on, write your desired obituary and then behave accordingly. Munger says, if you don't care whether you're rational or not, you won't work on it. Then you will stay irrational and get lousy results. You can learn a lot from dead people. Read of the deceased you admire and detest. And both partners have been avid readers, right? Don't bail away in a sinking boat if you can swim to one that's seaworthy. Another quote, a great company keeps working after you are not. A mediocre company won't do that. Warren and I don't focus on the froth of the market. We seek out good long-term investments and stubbornly hold them for a long time. He quotes Ben Graham. Ben Graham said, day to day, the stock market's a voting machine. In the long term, it's a weighing machine. If you keep making something more valuable, then some wise person is going to notice it and start buying. There's no such thing as a 100% sure thing when investing. Thus, the use of leverage is dangerous. A string of wonderful numbers times 0 will always equal 0. Don't count on getting rich twice. Another thing he says, you don't, however, need to own a lot of things in order to get rich. You have to keep learning if you want to become a great investor. When the world changes, you must change. And Buffett ends a lot of these quotes from his partner by saying, I'll add 2 short sentences by Charlie that have been his decision clinchers for decades. It's this, Warren, think more about it. You're smart and I'm right. Some applications from this 5th section, purposeful philanthropy, build a giving policy that scales with cash flow. Choose causes that align with gospel-shaped human flourishing, families, work, education, church. If you're a Christian business owner and God has blessed you, think of creative ways to give back to Him and to your community. Succession and ownership. Write an owner's creed. Have a generosity charter for your family and companies. Your success can write it for you if you're not really deliberate, and particularly when you think about your will and leaving money to your kids. Do you have a way of enforcing generosity with that? Find your Charlie. Seek partners who sharpen you, who tell you the truth, people with skin in the game, and make disagreement safe and clarity non-negotiable. You want partners who will tell you the truth, even if you don't want to hear it. And then 4thly, gratitude is strategy. Gratitude makes you anti-fragile. Grateful leaders steward cycles better than entitled leaders. Build Thanksgiving into the very rhythms of your team. So quickly reviewing the 5 points, character first, only buy, build, or back a business that has honorable leaders of integrity. Secondly, we saw patience and compounding. You can allocate to a few high conviction, long duration holdings. Systematize that patience, build it into your system. Thirdly, truth in numbers. Avoid funny business when reporting your numbers. Figures lie and liars figure. Refuse what some might call accounting theater. Fourthly, avoid risk in your business. Try to keep liquidity sacred. Keep your leverage in balance. Keep it sane. Don't go way out on a limb. And fifthly, stewardship. Institutionalize generosity, gratitude, and wise partners. I hope this has helped you as you try to integrate theology and finance, as you try to think through scripture and stewardship. Again, Warren Buffett is not a Christian as far as I can tell. I don't think Charlie Munger is either. And yet so much of what's written in his annual shareholder letters is spot on with what the Bible teaches us. I hope this video was helpful. If so, please subscribe, share, leave any comments that you want in the bottom. I try to reply to those, and share this with another Christian business owner or Christian entrepreneur. And in the comments, maybe tell me which of these 5 themes you'll try to implement this coming year.